Thank you. Good morning, everyone. Thank you very much, John, for kicking us off, and to OMFIF and the DMI for having me here today. I guess by way of reflection, just thinking about the speed of change, just 10 years ago, we certainly wouldn't be having this conversation, and I'm not even sure where the digital money conversation is. So just in that last decade alone, we've got a complete new conception of currency. Ever since Lydia's King Alietes minted what is believed to be the first official currency, the Lydian stater, in the 7th century BC, this building doesn't quite date back to that, I hasten to add, currencies have improved trading systems and contributed true prosperity. His son Croesus, the last Lydian king who minted the first gold coin, is synonymous today with wealth. But the currency did more than just boost the wealth of Croesus, of kings. The Lydian currency helped the country increase both its internal and external trading systems, and it made it one of the richest empires of its time in its region. I guess that also reminds us of the fragility and change of history. So since then, money as a means of exchange has continued to grease the wheels of economies. It's central to marketplace functioning, delivering greater efficiency in an economy and stimulating trade. Ancient coins, in their way, were revolutionary. They were portable, hard to counterfeit, and had value either intrinsically or through the backing of a state or an empire. So important was the veracity of denominations that several centuries after their creation, paper banknotes in the 13th century China, another innovation, bore a warning that those who are counterfeiting will be beheaded. I'll tell the Home Secretary that'll put our new fraud strategy in a different light. So if you didn't realise today, this is an important and highly pertinent matter, and something that I and my colleagues in the Treasury are giving a lot of time to. From paper money, we moved to digital, and then mobile payments, and then just 10 years ago, when I wasn't in politics at all, I was working in technology companies then, came the first crypto assets and digital currencies. What I think we can draw from this, what I draw from this, and what I wanted to talk a little bit about today, is how we embrace that change, how we follow in King Alietes' innovative footsteps and harness technology to become ever more prosperous, to deliver for our citizens. You don't need me, a Treasury Minister, to tell you that the way that money in the UK is being used is changing fast. Cash will remain important. For many, it's a simpler, easier, analog resource than modern alternatives. Many in rural communities and those who use cash as a simple way to manage their finances mustn't be left behind. And that's why, for the first time ever, this year in the UK, we'll see a right of access to cash enshrined in law via the Financial Services and Markets Bill that's currently going through Parliament. That bill also contains enabling legislation for things like financial money, financial market infrastructures, the ability to start using distributed ledger. So you're doing both sides of that at the same time. Because as a society, we are moving increasingly to electronic payments. Non-cash transactions here in the UK now account for around 85% of UK payments, and it's still growing. Banknotes issued by the Bank of England are being used less frequently by households and businesses for day-to-day payments. Whilst protecting the backstop of cash is important, we're not seeking to hold back the tide of change that is coming. As the Prime Minister's been very clear, as a country, we want to be a science and technology superpower. And doing so means embracing innovation across the spectrum, not least in the all-important part of our economy that's financial services. So just as Lydian kings, Chinese dynasties, and European states realized, there's a huge potential in monetary innovation and many benefits from doing so. We're determined that the UK should be at the forefront of innovation in money, payment, and financial services as part of that vision for a technologically advanced, sustainable, and globally open financial services sector. The UK fintech sector is a clear example of what it looks like when we get it right. A great success story here, with around 2,500 firms supporting tens of thousands of skilled jobs across the country. And last year, it attracted more investment than the fintech sector of any country bar the US. We know the great leaps in our technological power will be powered by AI, quantum, exascale computing, and we're setting out our stall with clear ambition. In the spring budget, the Chancellor announced the publication of our national quantum strategy. We set out our vision for becoming a leading quantum economy, built on a 10-year, £2.5 billion research and innovation programme. And at the same time, he announced $900 million to create an exascale supercomputer and AI research resource here in the UK. And those are tools that will be available publicly for developers and businesses to use and boost our research power in the coming decades. And of course, crypto and decentralized ledgers are going to be a key part of that future. Recent volatility has shone a light on some issues within the sector, and it reinforces the need to take a prudent approach and that good regulation, rather than none, is needed. But not to embrace change is a risk too. Alan Key said the best way to predict the future is to invent it. That's very much my own thinking. So when it comes to the digital pound, our goal will be to ensure that public trust in money remains high and forms of money and payments meet the evolving need of individuals and businesses. We envisage a digital pound acting in a similar way to a physical pound. It would be a safe, trusted form of money. It would be accepted for everyday transactions by businesses and households alike, used in-store, online, and to make payments between family and friends. It would exist alongside and be easily exchangeable with cash and bank deposit. UK authorities remain committed to protecting access to cash, and a digital pound doesn't replace, it just complements cash. It will promote competition and choice and boost the resilience of payments in the UK. And it would help to ensure that central bank money remains available and useful in an ever more digital economy, continuing to bolster UK monetary and financial stability while safeguarding UK monetary sovereignty in a globally changing financial system. And we envisage that, very much in the spirit of today's conference, to be a public-private partnership for innovation, building a public infrastructure for private sector to innovate on. Based on our analysis and the insights we've received from industry to date, we think the digital pound should be designed as a platform model whereby the Bank of England would issue the digital pounds, which would be recorded in a core ledger. The Bank of England would build and operate the ledger, highly secure, fast and resilient technology platform, which would provide the minimum necessary functionality for the digital pound. But then regulated private firms would then access that core infrastructure via an application programming interface. More simply, these firms would provide digital wallets for firms and people to use their digital pounds, but the ultimate infrastructure would sit in the Bank of England. And these intermediaries could be existing financial services firms, but also new firms outside the financial sector. So in this way, a sovereign currency will be a core underpin of Web 3.0. Our consultation paper, the latest step in our preparatory work, has been published. It's been out a few weeks now. It's got a few more weeks to go. And I really do want to garner the widest range of views so we get this right. It commits us to progressing the next stage of technical and policy work that's needed to underpin such a decision. So if you haven't already, I urge you to take a look. Some 90% of countries have said that they're exploring sovereign digital currencies. Motivations between jurisdictions and therefore the eventual design decisions will fit country-specific circumstances. And we will and need to take the decision that's right for our economy. But movement is taking place elsewhere in the world, and I don't want the UK to be left behind. Instead, I want us to continue galvanizing action on the global stage. I've said elsewhere in respect of crypto assets and digital currencies, that we have the opportunity to be the Goldilocks economy. Not the first mover, not too hot, not with some of the challenging attributes, but also not an economy that sits in the cold and doesn't get there in time. That's our vision and ambition. It was under the UK's 2021 G7 presidency that the G7 members agreed and published public policy principles, there's a mouthful, for CBDCs, covering issues that ministries and central banks agree should underpin the issuance of any CBDC. These international principles represent a step change for the global conversation, are intended to support and inform exploration of CBDCs in the G7 and beyond. So to conclude, ladies and gentlemen, Mr. Chairman, as has always been the case with new forms of money, there's a lot to be excited about in this space and a lot riding on the success. In just a decade, technology has forced or driven or opened up the opportunity for an entirely new conversation about money itself to take place. The same principles of trust and security need to be in place, but we need to stay ahead of the innovation curve. Just as hundreds and hundreds of years ago, the people of Lydia saw in new forms of money opportunities for growth and for enterprise, so too can we use this latest innovation to make trade ever more seamless and in process our economy ever more prosperous. So thank you very much indeed for having me, and I wish you all the success in your meetings and the speakers you're going to hear from over the coming day.
You take a seat. Andrew. Good to ask you a couple of questions. Thank you. Please take a seat. Andrew's kindly agreed to answer a couple of questions, and I'm going to offer you the chance to put one as well. So if you have a think about what question you want to ask Andrew, he's with us for 10 minutes or so. My first question, Andrew, if I were to characterize the attitude of the excellent Bank of England paper, it would be that a CBDC may well happen. And the way that you've spoken just now would suggest that you think it probably will happen. Is that a fair distinction?
Look, I think I don't want to step outside the words we've used because it's important to get the signalling right. Clearly, by committing the time, we wouldn't commit the time to the consultation if we didn't think we're getting closer. We're not there today, right, but we're getting closer to the point that it becomes a when, not an if. There's lots of important public policy considerations, so it's a thoughtful consultation, both about what it will take from a technology perspective, which is clearly non-trivial when you're talking about a G7 central bank or sovereign, but also some of the policy safeguards that society itself will look for. So we're trying to do it, I think, looking at, I would just say, in a sort of grown up and a sustainable way, but we are getting closer to that point.
In terms of the identity and privacy issue, it's a major theme always in these discussions. Most central banks, I think, including the Bank of England, expect that will have to be handed back to lawmakers to decide on the nature of digital identity. Would you agree with that before they can implement a state system that collects information about people's transaction behavior?
Yeah, look, it's a very profound area. People expect the highest degree of trust. You know, we can go through the first principal attributes of central currencies, but trust is core to them. And the consultation paper envisages effectively precisely the same role as currently set up in the UK. So, you know, heavily safeguarded by the legal system, which is operationally independent from any form of government.
Okay. Any audience question for Andrew? Put up your hand, please. John. Sasha, you could give John a microphone. Chris, sorry. I'm John, you're Chris.
Thanks, John. So, say that digital pound does happen. Can you just sketch out in your mind's eye who you think will use it to start with and what you think it will be used for? As you think about it in your mind's eye, and just give us an idea of who you think will use it and the use case.
Well, look, that's one of the things that I'm hoping to hear from industry participants. I mean, it seems to me very clear that whatever the time horizon for a sovereign digital currency, that there will be third-party private wholesale currencies. Indeed, the bill that we're currently taking through Parliament literally creates an environment for the regulation of fiat-backed wholesale digital currencies. So they will be in the market first. Some of them are there now. And the retail side of digital payments is already very well advanced. So it seems to me there's a core role for some of the attributes of a sovereign currency, those attributes of trust, of ultimately backstopped by a state, which no private operator themselves can provide. They can come close, but they can't fully provide that risk-free currency. But I think I'd like to hear more from people, private sector actors who would integrate this into Web3, into other applications, what the precise utility of that would be. And of course, we want a dynamic and competitive financial sector. And so part of that is the ability for a wide variety of operators to interact with a central bank. That's something that changing technology, should allow people a broader range of actors to do. I mean, in the old days, it was all about physical proximity. There's a reason why we're sitting here in the city and everyone's, within a couple of yards of Threadneedle Street. In a fully decentralized world, physical location should not be the attribute to be able to interact with a central or sovereign bank.
So rather, as the Bank of England says, you think the symbolic value of CBDCs is as important as some of the practical applications in the broader digital ecosystem?
I think we're pretty humble in terms of no one should be sitting here, saying with precision, what the world of the future is going to look like. Technology is changing at such a pace. It's never going to change at such a slow pace again. And yet, look at the rate of change that we're seeing. Web3 hasn't really got started, the idea of fully decentralized, fully integrated web. And then some of the applications that we're going to see from quantum and AI. You've got to look at this in the round. So to me, my personal view is there's greater risk in not engaging, given that this is a long lead time conversation. If you want to bring people with you, if you want to have the very highest degree of security and resilience, this is not going to happen overnight. There would, to me, be greater risk from not getting going, from not trying to keep as many options open as possible, than if we sat here saying we're just going to wait and see.
And so you're as interested in the wider ecosystem as the retail cash application?
Yeah, look, I think, what do we know about digital? It's that it has this enormous capability to just completely reinvent value chains, completely unpack and then reintegrate different factors of production. We've seen that with how much hardware has been replaced by software, how physical location has moved to the cloud. So I think we need to properly have the conversation, which we are having today, which you're having over the course of the next 24 hours, about what are the real attributes. You can unpack money and payments. There's attributes of trust, there's attributes of utility. There are different actors within that market. And my hunch is, given the profound degree of change that we're seeing in compute, that actually we need to think about each one of those attributes. And in that context, I think it would not be right not to be doing the hard lifting now on a CBDC, because we may well find that some of those attributes of trust, of a sovereign-backed form of money and exchange, actually do have pervasive value and are really quite important underpins in some of the next stage of the web.
Seemed to be the most important point of the paper. So one last question from the audience. Sandra, go in a second. You, sir. Perhaps you could tell us where you're from as well, please.
My name is James Fierro, and I'm with Eco Capacity Exchange. The whole idea of trust and sovereignty, while there is certainly some important elements of trust that come from sovereignty. There's also a much bigger problem on a global basis because sovereign nations act in self-interest. They don't act in global interest. So corporations like Coca-Cola do business in 206 countries. A sovereign digital currency doesn't solve their problem, which is doing global business. And so what's the solution for that? That doesn't get resolved by fiat-backed digital currency.
The interoperability question.
Look, I mean, I think the simple answer with respect is that we can't look to one particular aspect to solve all of the world's problems, right? I mean, the interoperability is really important. It's why we've been doing work at the G7 level. Clearly, the broader objective, if we're trying to drive global economic prosperity to do what markets do well, which is lift billions of people out of poverty and improve the lot and extend human life. That's what markets have done prodigiously well in history. The best way we can do that as lawmakers is to try and remove frictions, right? Not to create new frictions as we go into this world, to take the best of what we've got today and try and improve on that. That's a big project. It's a much bigger issue than a technology stack or a particular form of payment mechanism. I'll follow the rest of your day vicariously and see if we've got an answer to that. But you know, what our role is, you know, control what we can control. You know, we are a sovereign. We do have existing central bank issued currency. You know, my role in working closely with the Bank of England jointly on this is to make sure that we're keeping our options open and doing the hard yards now to look at how we can take those attributes forward into a very different technology world going forward.
Thank you, Andrew. And it's certainly clear that the central banks are talking to one another. So I think they'll solve this eventually. Andrew, it's very kind of you to come to. Yeah, I hope so. Thank you for joining us.
Thank you very much indeed.
Bye-bye.
Thanks, everybody.